TJ the Wheel Deal coming at you live. It is Monday, July the 28th, 10:21 a.m. Central Time, Texas time. Wasn't planning on going live today, but made quite a bit of moves in the portfolio, just kind of cleaning things up because we got a lot of travel that we're doing here from now to the end of the year. And I just want to make sure that I'm in the highest conviction place, guys. I feel like the market is absolutely toppy. Everything just keeps falling perfectly in place. Trump announces deals and everything is just absolutely perfect. I just been in the market a little bit too long to know that that's going to last or that's likely to last. So I just want to make sure that I'm in my highest conviction place. This isn't the time to be screwing around because if there is a pullback, I want to make sure that I'm in the stuff that I really want to be in, because if these short puts start going against us, I want to make sure that I'm actually in a position to take ownership of some of these shares and ride them back up as a swing trade, if you will. So that's kind of the idea. So anyway, appreciate each and every one of you guys. Those of you that are new to the channel, my name's TJ, the Wheel Deal. I sell puts and sell calls for a living. It's 1 second. It's my wife. She's asking about some readings for her grandma. My wife's grandma passed yesterday. So anyway, I'm just helping them out with getting them, the little eulogy and all that stuff, the stuff to read. I just happen to be good at that kind of thing. Unfortunately, I have a lot of experience with it. It sucks, but it's just one of those things. But anyway, so my wife and I have this thing in common now. Like our grandmas died on the same day. Mine was 6 years ago. Hers was yesterday. And it was beautiful. It's beautiful. My grandma was 93 when she passed. Her grandma was 91. I mean, that's a life well lived, guys. So it hurts a little bit differently whenever somebody is able to enjoy that privilege of getting old, if you will, because that privilege isn't afforded to everyone. Like I lost my daughter when she was 14. Granted, she took her life. So that was a decision that she made. So she wasn't afforded that opportunity to be able to live through that, and deal with whatever demons she was dealing with and live to a nice old age. So that, it's just not afforded to everyone. So it's a privilege. Like growing old is a privilege, and it's beautiful whenever you start thinking about it that way. So anyway, let's get into it. I appreciate all of you guys. I did put the stream on here. What's going on, Wheeling in Idaho? Anybody wants to just kind of like come on here and shoot the shit? I got probably at least 30, 45 minutes, maybe more. I mean, we've got a whole lot going on today. My wife's out doing, her stuff. She's obviously real preoccupied, and I just started working, making a bunch of moves and stuff because I was like, I had wanted to start cleaning up the portfolio today, but now it just really felt like as good a time as any. Appreciate all you guys checking in. Appreciate all the condolences on our WhatsApp group and whatnot. Yeah, for sure. So anyway, are you letting the 120 cover calls on Hood ride? I've actually already moved those. I moved those and Palantir. I'll talk about those. I kicked Palantir and Hood way down the road because I needed to free up some capital, and I'll tell you all why. So the moves that I made today were because I have a move in mind. I want this portfolio to be very, very heavy on one particular ticker, or actually like 3 particular tickers going forward that'll be expiring every 30 to 45 days. And then everything else I want kicked out in the distance. And then my cash flow will be made with a more reliable ticker, if that makes sense. So that's kind of something that I've been working towards. So I know that our audience is going to be kind of small today because I believe Amit's still on because he's always on, right? It's the Amit News Network, ANN. So we got to find our own audience, right? We got to find our own audience. Excuse me. at the end of the day, 3 months ago, they're being challenged. Market is toppy. So thinking of just doing nothing, what would you do? I would probably do nothing. I would do nothing. Earnings are coming up. You're going to have the IV contraction. So that'll help you. That'll help you. So anyway, let's get into it, guys. Portfolio update again. I was saying I'm TJ the Woodhouse and put so cost for living, roll one makes dollars and cents, and sell the timely leap. And now I do short strangles. It's an agreement to buy shares at a certain price. It's an agreement to sell shares at a certain price, but you don't own the shares yet. You don't own the shares yet. So anyway, let's get into it. Let's get into it. Yeah, I've already seen a spike in the viewership. So tells me that Amit closed down his morning marathon session already. So anyway, let's get into it, guys. Let's get into it. Let me see if I can figure this out here. Present. Actually, I thought I'd already done that. Let's see if y'all see the kaleidoscope action. And I'm just waiting on the TV for confirmation because I've got it in the background so to make sure I'm showing y'all the right stuff. And we are. Okay, we're in business. Let's get it going, guys. Let's get it going. So we are going to start with account ending in 01. It is pretty flat for the day, but we've got stuff 116 days out. Why? Why is everything 116 days out? It's because there was a spike in implied volatility. So these brackets here on the options buying power went negative for a hot minute this morning. So I was like, let me kick everything off. Let me wait for the IV contraction, if you will. And then we'll put some more trades on a shorter term basis. And then I also reduced the positions. This was like at 200 contracts at some point on Hood. Now we're at 100 contracts, 85 on the put, 135 on the call, 116 days out. So this is just a theta collection project, pretty steady, $2,300 a day in data collection, and feel really, really good at 85 on the put, and I feel really, really good at 135 on the call. Y'all are going to see a recurring theme here. On end phase, 35 and 45. Again, I have placed these so that we can really consider assignment on the put side of the house. Palantir, not considering an assignment. So we went 140 and 200. I feel like Palantir is going to knock it out of the park. There's going to be yet another leg up. And then I think Palantir will chill out somewhere over there for the foreseeable future. But we don't want to play with fire with this particular account. There's a bunch of extrinsic value here, 102,000, already made $72,000 on Palantir, and we want to make more. I want to make more. I'd like to get to a $250,000 on Palantir. So 140 on the put, 200 on the call. I don't expect ever having to mess with the call side of things. If anything, I feel like the put would get challenged, and it is very, very delta neutral. On Amazon, this one's in the distance too, 215, 245, not doing anything there. And NVIDIA is 150 and 180. I can't even believe the 180s are getting halfway challenged. It's crazy. I mean, it's just the market that we live in. So that's what's going on with this one. Account ending in 33. There's 4 positions there. We'll go one at a time. 33 and 40 on end phase, 18 days out. I just put this one on today. I'd already made some money with end phase, and we don't have any share ownership in this particular account. So I was like, maybe we could do end phase on a little swing trade action. You know, there's plenty of cash here, 612,000. There was over $1 million in the first account. So I was like, let's see if we can get assigned some end phase at $33 and then try to ride those shares up to like 35, maybe even 40. That would be a nice little bump for the portfolio. So I'm not opposed to owning shares if I'm getting them at a price that actually is exciting for us, and it's just going to be a swing trade. But long-term holding in shares, that ain't going to happen anymore. I just feel like it's not capital efficient. SoFi, 17 and 27, 53 days out. I know we're in the middle of earnings and stuff, but I feel real good at 17, and I feel real good at 27. I just think SoFi is going to play in that particular range. Hood, kick this can down the road too. 90 and 135. Feel pretty good about it. On the next round, I'd like to get to like 85, 80, and then maybe 140. And then we're going to go after. We're going to try to go grab all of that extrinsic value at that point. So we're sitting 116 days out, 50 contracts. Then on Palantir, 140 and 200. Y'all are seeing a recurring theme there. 50 contracts, and we're going for it. There's $102,000 in extrinsic value there, and we are going for it. So that's what's going on there. We'll save the account ending in 60. That's the big account. We'll save that one for later. Account ending in 20. End phase 30 and 45. 53 days out. I don't even have to look at that one. Feel real good about it. Already up 4,700 year to date. 9,450 in extrinsic value there. I feel great about it. Hood, another recurring theme. 85 and 135. 116 in the distance. 100 strangles, 100 short puts, 100 calls, 127,000 of extrinsic value. I feel really, really good about it, guys. Really, really good about it. There's 127,000 of extrinsic value, and I want to go grab all of it. Palantir, recurring theme, 140 and 200, 116 days out. It's on easy street now. Already up 16,000 on the position. $204,000 less of extrinsic value, and I want to get all of it. And I think 200 is don't have to go any higher than 200, and then we'll start working our way down on the short put. So we'll go 140, 130, 120, 110, 100, and then at some point we're sitting at 100 and 200. This is just a money printer at that point. It's an absolute money printer. I think that 100 is going to be the new baseline for Palantir personally. SoFi, just $18 puts. That's it. Waiting for a pump so I can sell some calls. So I'm hoping for a nice little pump, 23, 24 bucks, something like that will be amazing. Sell some calls at like 28 to 30 and print to bring some money through the door. Let's look at the Suns account. What's going on? Just two positions left. I took SoFi off earlier today. That way we don't have to mess with earnings or anything because we're already up over $93,000. So I'm trying to like secure the win, if you will. There's still 8,300 in extrinsic value. So I could theoretically ride these out in 18 days, be up over 100 grand. So what do we got? We got 33 put on in phase. $40 call on in phase. So nice little sweet spot trade there. There's $7,150 already up 6,276 for the year on in phase. Haven't done to share yet. I feel pretty good about it. Pretty good about it. Now, here's the thing though. You got to look at the cash. The cash is 101,000, right? So that would be what the portfolio would be worth if everything expired out of the money, if I wrote it out to the end. And again, we're 18 days to expiration. So that's what I'm trying to do with this particular account. But we got to look. It's 5,000 shares times 33. 5,000 shares times 33. Got my little calculator over here. That's an agreement to buy $165,000 worth of in phase. We don't have enough money to do that. So we would have to take ownership of those shares on margin. So obviously we know that we would have to roll this. We would have to roll it 32, 31, 30. Then maybe there we'd be comfortable with even that level of margin. And we would essentially be all in on in phase, selling cover calls very aggressively on in phase. That is something that I would strongly consider doing because at these levels, I feel like in phase is an absolute no-brainer. So I feel more nervous about the short call at 40 than I do this short put at 33. So I feel pretty good about it. If I feel the pressure, I just kick the can down the road or wait for earnings on SoFi, let the dust settle, have the answers to the test, and then take it off completely and then go rock with SoFi. On CleanSpark, what do we got? 11 and 16. I feel really, really good about that one too. There's 1,180 there. We want to try to grab it. And we did that strategically so that if we collect all of this money, boom, our year to date would go to pretty much a wash. So that was just one of those things. And if we look here at the history here, year to date, you're going to see on the right hand side, CleanSpark were negative 1,300. On end phase, we're up to 6,000. This is with year to date with fees. With Hood, we finished that campaign up 3,000, lost 1678 on Neo, made most of our money on Right. Surprise, surprise, right? 15,273. Lost money on the leaps on SoFi early on. If I had just stayed in those leaps, this account would already be at like 110, $15,000. That's the reality. So that was an error in judgment there. One, I thought I got a shitty deal on the leaps. Two, I didn't stay in them long enough. So I botched that trade as bad as I could botch it, essentially. Soxel made a little bit of money on Soxel, and then TSOL was another nice winner at 3,046 bucks. So these are the tickers that I've been rocking with in this particular account. I feel like there's still an opportunity to make money there with TSOL. Soxel's probably even one that I could put a trade on as well. There's still SoFi that I could go back to at these levels. I could even Neo's on the table. The reason I took Hood off the table is because it's just too expensive. Like if I got in a situation where I had to take ownership, it wouldn't be that many contracts because this is a very small account, right? This is like 93,000 bucks or so. So that's the reason that I don't want to play with Hood because it's just not in that price range. And then End Phase is in the price range, Clean Sparks in the price range. So that's what we got going on with that position. Now, portfolio. Now let's go to the big account. So let's start. We got all the days to expiration. We're all lined up. Super. And I'll get with y'all's questions here in a second, guys. So Amazon, what do we got? 230, 250, 53 days out. Earnings coming up. I feel pretty good about it. Got my smoothie here. It's not a very healthy smoothie today. I got bananas. I got strawberries. I got 2 scoops of the protein powder, but I put half a scoop of ice cream in here and some peanut butter just to make it taste really, really good. So it's more of a comfort smoothie today. God, so good. And it's got an extra 200 calories that it doesn't normally have. And that's why it tastes so damn good. Yummy, yummy, yummy. So 220 and 250, 217,500 of extrinsic value, and we're going for it. We want all of it. We want all of it on Amazon. And this will be a recurring position, guys. Like I'm probably never going to be on Amazon. Clean Sparks, another one that we keep going to the well on. 11 and 18, short strangles. Feel pretty damn good about it. We look at the brokerage cash here, 19.45, right? So there's plenty of money. There's almost $8 million in buying power. So we could take ownership of stuff if we needed to. If there was like a massive leg down, 10, 20% drop in the market, we'd probably be okay. We'd scramble a little bit, have to roll stuff down, but we're in a position where we can take ownership of a lot of shares. Apple, 195 and 235. This is the position that I feel the best about in the portfolio. I like where the goalposts are positioned. I'll like it a little bit more on the next cycle. So I'll probably be at like 190 and 240. And we can get to a finish line, I feel like at 190 and 240, we can get to a finish line, meaning we can get to an expiration date. That's $216,500 of extrinsic value there. It's 500 contracts. That's a huge obligation. So we're talking about 50,000 shares times 195. So it's an agreement to buy $9.75 million worth of Apple. And I'm looking to double that position. I'm looking to literally just make it the cornerstone of the portfolio, the one that's expiring, 40, 50, 60 days from now. I'm rolling at 21 days to expiration, and it just keeps growing the portfolio like clockwork. Google, another one, 175, 205. I don't feel as good about those. I don't feel as good about it because I feel like there could definitely be pressure on the short call. Same thing with Apple, but when we get to 240, eventually 250, easy street on Apple. On Google, not so much because I do think that Google could go to like 250 at some point. I feel like the market's going to put some respect on their name. Their earnings were absolutely stellar a few days ago. but sometimes it takes a while for the market to digest and be like, okay, let's give credit where credit's due. So I only feel okay about this strangle, even though on paper it probably looks better than Apple. I just don't think it is. I just don't think it is. So I feel more comfortable when this is at least at like 225 or something like that, and 175 is where I want to be on the put. So I feel good about that. But I need to get to like 225 eventually on the short call. So hopefully on the next couple of rolls or so we'll be there. Hymns. This is one that I'm starting to feel a lot better about. I did a little bit of homework over the weekend, and I really think that this company has something here that's going to be pretty special. So, I could see this position getting a little bit bigger. I may do another 150 contracts on hymns now that I've freed up quite a bit of buying power. So anything that stays in this portfolio now, because this was 20 positions, now we're down to like 14 or 15. Now I could go heavy, and that's what I'm looking to do. So hymns is one that I actually wanted to sell more puts and calls on. So I'll walk y'all through that trade right now. Let me get this just a little bit larger here. So what you do here is to sell the option, the strangle, is you click on it and you hit trade. And you go to your options table. And I'm going to go 53 days out. I'm going to match up the exact same trade. So you can see that I'm well outside of the expected move. This bronze bar right here, the copper bar, that is the expected move for this particular cycle. So I'm going to go to the 12 delta at 40, and then I'm going to go to the 25 delta at 80. So it shows that there's more risk to the upside here, right? Because Hams has like short squeeze potential and all this other stuff. So it's something that I got to be cognizant of, and I am. So shoot, what did I do? There we go. So and then I'll just take less credits to get it filled for you guys. And at 65,000 in credits, we're reducing our buying power by $202,000. So let's see if we can get it filled. We'll let it cook. I'm going to take it down just one more, couple more right there. See if I can get it filled quick. Move on to the next. There we go. So we got it filled. So now the position looks legit. It's 250 contracts. So it's an agreement to buy 25,000 shares of HIMS at $40. So let's see how big that is, right? Times 40. So it's an agreement to buy a shitload of hymns, right? A shitload of hymns at $40. So that is something that cannot be taken lightly, if you will. So that's the thing. It's $1 million. It's $1 million worth of hymns at $40. Do I like hymns at $40? I do. I love it at 30. So that's something that I'm kind of hoping low key that hymns tanks some, and then I could be in a situation where maybe I can take ownership of $1 million worth of hymns or 800,000, whatever it is, whenever we roll down to like 35 or 30, and then ride those back up to like 35, 40. And those are the pops that I'm going to be looking for in the portfolio, is those swing trade pops. TSLL 9 and 22. This is an easy street trade, guys. This is an easy street trade. I've considered even doubling this position, except I have to type a lot of capital, right? 230,000, and then it would pay me like 16,500. It's not really what I'm looking for. That's not the return that I'm looking for. So I'm just like, I'm happy with TSLL. Made $524,150 for the year so far on TSLL, but I don't see this as a spot to just go crazy with it. UNH, this is another one that's been pretty steady, feeling pretty decent about it at 250 and 400. I feel better about the 250 than I do the 400. I feel like this thing at some point, there's going to be some news and it's going to go up, and I'm going to be defending those damn 400s. And that's why I went very wide with this particular strangle so that I had plenty of room to roll the short puts up. And the short puts are at a 22 delta. The short calls are at negative 0.07. So it is it's okay if United Health goes up to like 300 even. And at that point, the deltas would probably get a little bit more neutral. And I feel like I'm positioned there to win as long as we have the buying power, because this is already utilizing $750,000 in capital requirements. So Oxo, it was a bigger position that I had in the distance, and then I decreased the position, went a little bit smaller. We were down over $300,000 at one point on Soxol, so I locked in a win on another position. So now we're only down 222, and I say only because it's a lot of money. But I think by the end of the year, as I get this position larger, I just wanted to get more comfortable with it. Then I'll increase the contracts, and I want to get to break even on Soxol. Call it a range trade, call it whatever the hell you want. I just feel like I'm gonna be even year to date on Soxol. I took this as a tax loss harvest earlier whenever we had made a lot of money selling out of our shares of SoFi. And I know that it doesn't look like we made money on SoFi here, but we did because we own these shares from Robinhood and ended up selling them over here. So once the IRS figures all of that out, that's why this year to date is a little bit deceptive, because some of these positions were in Robinhood, and then they came over to Tasty Trade in March. So it's real hard for Robinhood and Tasty Trade to get on the same accord. But we're going to have both of those statements, shoot them over to the IRS, and the accountant's going to be able to piece it together pretty damn quickly. So that was just a strategic tax harvest loss that I did earlier on in the year. And now I want to go grab that money back. Excuse me 1 second. Hello. Hey, how are you? We're good. We're good. Everything's good. Yeah, I was just calling. I was just calling to see if you had the little. Sorry about that. That was my sister-in-law calling from the funeral home. They're trying to get the readings over to the funeral home over here to kind of get that knocked out. Sorry about that, guys. So anyway, where the heck were we? The United Health, maybe Soxal. I think it was Soxal, right? So I put this one on, and I feel pretty good about it. I'm gonna let it stew for a little bit. Eventually, you'll probably see that one at 500 contracts. I just want to see what it does with the capital requirements, because whenever you put the position on, it shows you what the capital requirement is going to be when you put in the trade, but it won't actually show up over here until the end of the day or sometime tomorrow. So I want to see that cook before I add the other 400 contracts to Soxal. Hood, we're sitting at 85 and 135 now. 116 days out. So I moved the goalposts. Y'all can already see that the year to date is climbing up. So this is just a data collection now. $5,500 a day in data on a Sleep Easy trade now. There's $633,000, excuse me, of extrinsic value. If you look at the order chain there, collected a crap load of credits, guys. A crap load of credits. It is just absolutely ridiculous. It's absolutely ridiculous the amount of money that we collected on Hood, but now we got to realize it. Now we got to realize it. Now we got to capture it. How do you do that? You stay in the trade. So I want to stay in this trade to that 30-day mark, 21-day mark. So everybody will be talking about the next earnings report. And then I'll probably be looking to go 80 and 140 or something like that. And I feel like at that point, we'll legit be able to go for it. Hopefully, we'll be able to go for it now, meaning go get all the extrinsic value and call life good. But if not, on the next one, I can widen on both and get that goalpost real wide. What would be an ideal 75 and 150? I can get to that point. I don't give a shit what Hood does. I feel like it'll stay in that range. Palantir, same thing. Now, I didn't go as conservative as the other ones because I don't have to here because I don't have to answer to anybody on this one, right? So 140 and 180, and I feel good about it. I feel absolutely good about it. There's $628,000 of extrinsic value. There's $348,000 year to date. So you do the math, we're starting to sniff at $1 million. And I told you I was trying to get to $1 million on Palantir. And I feel like at 180, I'm going to be okay. But if not, for the next cycle, we'll get to 200 and then we'll be able to go grab all of it. So the beautiful thing about the strangles, if you're able to manage the bankroll, you're able to manage your emotions, and you have plenty of time. You don't mind having these trades on the books for 3 to 5 years. Because it's like I always say, you got to be willing to own the shares for 3 to 5 years. Well, here I'm saying you got to be able to handle the strangle for 3 to 5 years. You can capture a lot of extrinsic value once you get the goalpost position the way you want the position, the way that you're comfortable, and you can go grab all of that extrinsic value, and then the portfolio is going to start going up and to the right. And that's exactly what y'all have seen in this portfolio, guys. So you can't deny it because all you got to do is roll the tape. All you have to do is roll the tape since I started it, and the portfolio doesn't have any of these crazy fluctuations anymore. And it's just steadily going up and to the right. This is just a massive data collection project. SoFi. I de-risked SoFi a little bit today. I have 5,000 short puts at 19. And I've got 2,000 short calls at 25 for January of 2025. I used to have 5,000 short calls. 2,000 of them were at 35 and 3,000 of them were at 25. So I took off 1,000 of these. I want SoFi to pump. And then I'm going to sell 3,000 more short calls, but hopefully in that I'll bring a lot of money, throw the table, and that's kind of how we're playing this one. Tesla, this one's in the distance, 250 and 500. Not a whole lot to see here. Every day up or down, 30, 40, 50 grand, sometimes 100 grand. But it is what it is. 21 delta on the short put, 32 delta negative on the short call. So why does it say negative delta on the short call? Is because if Tesla goes up, you lose money. Why does it have positive delta on the short put? Because if Tesla goes up, you make money. If you have positive delta, if the stock goes up, you make money. If you have negative delta, if you're short delta, if the stock goes up, you lose money. I don't know if a lot of channels explain that to you guys, so you're welcome. Enphase, Neo, Riot, leaps. That's it. So what are the leaps? They're all January 2027, January the 15th. And on Enphase, we'll take them one at a time. $40, January 2027. Paid a lot of money. 1,070. I could have bought the leaps right now for 980. So obviously losing a little bit of money, down 18,000 on those leaps. I was already up, quite a bit on in phase. So I was like, I'm kind of buying the leaps with other people's money. So that's why I did that on in phase. I feel like in phase is going to print here, and along the way, I'll sell some short strangles to make a little bit more money. I just wanted to take those off right now because I'm trying to free up the capital so that I could take advantage of a little bit of a juiced up IV on Apple because I want to get Apple to 1,000 contracts. That's the reason that I did all of the things that I did earlier, is because I want to get Apple to 1,000 contracts. And once I get comfortable with Google, I want to get Google up to 500 contracts. And then once I get comfortable with Amazon, I want Amazon up at 500 contracts. So there's going to be massive amounts of contracts, but on the higher conviction plays, the highest conviction plays. I don't see me ever going over 250 contracts on United Health. On Soxa, I want to get to 500 contracts. On Hood, I'm good at 500 contracts. On Palantir, this is one that once I get comfortable again, not quite comfortable yet, but when I get comfortable again, 140, 200 or 120 and 200, something like that, then this one's going to have 500 contracts again. And that's why I needed to free up all of that buying power. So that's why I got out of some of the positions, because I know where these are going. And this is just easier to look at. So whenever I do the printouts, I sit down with the wife and whatnot. We look at everything on the kitchen counter. It's just one less page to print. So that is all of the portfolio in a nutshell. So now the other thing I want to do is I'm going to go to this page here. See if it shows that, ooh, it looks like something got filled. Wonder if it shows. I'm just waiting on it. Okay, yeah, super. So I'm gonna leave it there, and then first I'm gonna do some Q&A, and then I'll talk about this particular page here in a second, and kind of show you how I got it set up on the. So let me do invite here again in case if anybody wants to hop on in. Copy, paste. So there's that. If anybody wants to join. And let me see if there's anything that I can talk about here. Oh, here we go. So I already dealt with that one. What's going on? It's Jay. Appreciate the 81 people tuning in on YouTube and the 827 people that have seen the link on X. Giorgio Ronaldo, how are you? AK Media. I know I call it ANN, a News Network, because it's like CNN 24/7. TJ, are you selling and puts on open with high IV? No. I made a little bit of money, not much. A little bit of money on Open Door, but now that it's like legit meme stock, I'm just not interested. And somebody put like an $82 price target on Open Door. Shut the front door. That's comical. Let me close now. I choose you over Amit. Guys, Amit is awesome to watch. If you want to get a well-rounded market analysis, I mean, this dude puts in so much work on these market openings and market closes. Gives you a lot more information than watching freaking CNBC. So that's why I like watching Amit, is because I can count on him to do the work. I mean, he digests financial information like nobody I know. It's absolutely awesome. What we do here on the channel is a lot different. We show you what we're doing to make money. So it's just totally different channels, if you will. Michael Wilder, hey, what's going on? We are going to be in Los Angeles in October. Announcement time. Let's see if I can pull it up here. We're looking to do these tasty, I think it's called tastylive.com. tastylive.com. I think it's called events, maybe. Events. There we go. I'm just waiting over here to see if it shows up or not. Or do I got to do? Let me see. It's not showing up here. Let me go this way. There we go. Maybe that'll show up now. I gotta do this. Remove this guy. Man, how the heck do you do this? I forgot how to. Oh my gosh, I forgot how to add this thing here. I can't figure out how to share the screen. So maybe I did it by accident. Okay, there we go. I did it by accident. Okay, so we're looking at October the 3rd, Los Angeles, guys. October the 3rd, Los Angeles. These aren't for sure, but this is what we're shooting for. So October the 3rd, Los Angeles. We want to go to the Stacy Trade event, do a meetup afterwards. And then in November, it would be in Austin, right here. November the 7th, it'll be in Austin. So, tickets go live September the 7th for the one in Austin. The one in Los Angeles, the tickets go live August the 3rd. These are completely free. So this is sponsored. Let's make it a little bit larger. So it says at work by 11 a.m., Los Angeles. It's going to be Tony Batista and Tom Sosnoff, sponsored by the CBOE, Chicago Board Options Exchange, and CME Group. Join us in Los Angeles at the Fonda Theater for the tastiest pop-up event of the decade after 14 years together. Tasty Life founders and trading legends, Tom Sosnoff and Tony Batista, will hit the road for their first live trading event ever. This event is fun, challenging, silly, and very fast-paced. This is a live trading experience like no other. It's totally free. If it's free, it's for me, but it will be oversubscribed. Tasty Trade account holders will get preference for entry. All U.S. shows are on Friday mornings. Doors open at 8 a.m. and the event starts at 9 a.m. So I've already got my ticket on Eventbrite set, the reminder. So I am planning on attending this. I don't know if the wife will go, doubt it. She'll probably stay at the hotel or whatever. And then afterwards, we will have a meetup. So same thing with the one in Austin. Those are the ones I'm eyeballing. I saw one that there was going to be in New York City as well, but that one will not work because my brother's birthday is on the 18th. My wife's sister-in-law is on the 19th. And then there's a baby coming in the family around this time. So I know that one just won't work. September the 5th is one that will not work either because that is the 6th-year anniversary of my daughter's passing on September the 5th. So I would definitely not be in the right mindset to attend that particular seminar. Mike and the whiteboard, I'm sure it's cool, but I'd rather see Tom and Tony, right? That's just me. But this one, that one is maybe. I'm going to put that on the maybe because I've watched a lot of Mike and the whiteboard early on. B, Dallas is kind of close to us, right? I mean, it's an hour flight. So that is definitely something. And this is my favorite dude, Dr. Jim. That is my favorite tasty life person, if you will. And he also dabbles with the weights and whatnot. And I just love the way that he talks about options and he teaches. He might be like a professor by trade or something like that. So Dr. Jim is his next generation Tasty Life event is taking over. Please join Dr. Jim Schultz in Detroit at the Magic Stick as he covers an introduction to strategic finance. This nonstop, intimate 90-minute show features Dr. Jim in his element. These evening events are being held in smaller, fun locations with time allocated for some Q&A. Doors open at 5 p.m. The show starts promptly at 6. The events are free, etc. So, those are the ones we're looking at. So far, hopefully this is something that they keep doing and we can kind of work our Wheelers meetups around these particular events. That way, you're hearing the pros speak and not me, right? Like I'm not having to like carry a show somewhere. So that's kind of the idea behind that. So anyway, let's do some live Q&A here, and we'll call life good. When you say contraction, what is it you're looking at or meaning? It's whenever the IV contracts, the implied volatility contracts, right? So whenever you sell options, you want high implied volatility because that means their premiums are juicier. And then whenever you buy options, you theoretically want lower IV. Or whenever you're going to close out options that you sold, you would want lower IV. So you're playing for that implied volatility contraction. So when you're pretty delta neutral, meaning you don't really care if the stock goes up or down, you just need the implied volatility to contract and you can make money. Hopefully that helps you out. I made it up. I made it. What's up, TJ? The 116-day rolls capitalize on volatility and manage downturn risk. That is really just it was two things. One is I got more buying power. Two, I was able to get the goalposts the way I want them, so I feel like I control the trade doesn't control me. And then the third thing, and the most important thing for me, is to put my life on easy street, because I don't want to have to like keep looking at those positions too much. And I'm kind of hoping that the market tanks a little bit. Then all the short calls are awesome. And then now I'm just managing short puts. And then now I'm going to move that goalpost to where I'm like, ooh, I'm excited about this cash secure put now, this short put now. Kind of like end phase, right? End phase at 35, dude. I'm excited. I'm excited. End phase at 33, I'm real excited, right? At 30, super excited. But those deals are hard to find right now in the market because everything's like ballooned up big time. Happy Monday. What's going on, Mr. Premium? It is our first year selling options. Do you have pay the IRS quarterly to avoid overpayment penalties? No. I deal with them underpayment. I deal with them annually. In 2026, I am looking at sending disbursement quarterly. I was sending weeklies there for a while because I was trying to play catch up. But now that I'm just about on the other side of that, I think I'm gonna look to go quarterly next year. Just sold my 200 SoFi leaps. I just feel like the market is hyped and due for a pullback. I may regret it. I don't think you will. I never feel bad about taking an awesome profit, and I don't think you will either. TJ, what are you going in UNH? They're undervalued. I have 280 puts. Yeah, I showed it earlier. I think I'm at 250 and 400. 53 days out, I believe. So yeah, I like it. 16th like hymns, premiums, juicy. Yeah, I don't need another 2 times leverage play though. Not right now. Iron Condor on Google. I showed my put on Google, or my strangle on Google. Let me see if I can pull it back up again. So on Google, it's 175 and 205. So it's a short strangle, not an iron condor. What would turn it into an iron condor is if I bought a put and I bought a call. So put credit spread and a call credit spread is an iron condor. A short put and a short call is a short strangle. So you make a lot more money on the short strangle because you're not buying the insurance, right? On an iron condor, you're making less money, but it's a defined risk trade. This is an undefined risk trade. So I like to play with undefined, right? I'm just a little bit more risk tolerant, if you will. So that's what's going on with that one. Keeping it going. I've been printing with TSLL, AMDL, PTIR, HINZ. So these seem like all 2 times leverage plays, I believe. I want to buy leaps on UNH. Should I wait until after earnings? Since I theoretically, the answer would be yes for that. Hey, what's going on, John? Yep, Amit has interesting guests also. Found TJ throw Amit right on. Yeah, I used to be on Amit's channel quite often, but ever since I started doing strangles, he sent me a text that basically said, "Hey, I don't think this is really appropriate for my audience. There's a lot of new folks here, and we don't want them blowing up our accounts, trying to follow you into this kind of stuff." And also because I'm not on the Robinhood platform anymore. I mean, there's a lot of fucking Robinhood fanboys on Amit's channel. I used to be one of them. So I'm not on that platform anymore, and I don't think that that's really something that Amit wants to be showcasing on there, even though he usually uses Weeble to show his stuff, because I just think he likes the layout of Weeble better, or maybe it's because he doesn't really have an account on Weeble, so he doesn't have to worry about any personal information if he clicks the wrong things. Because that's what I hated about Robinhood: if you click the wrong stuff, it does worse than like show your account number. It does like name and address. I mean, might as well fucking throw my social out there. It's crazy. It's crazy. So you got to be very, very careful. So anyway, so last thing I wanted to show. The last thing I wanted to show was how do the charts look now? So I go over here to trading. It's taking a little while. I apologize. There we go. Okay. So what I do is I look at the charts, right? So I look at Apple 135, 235. And again, this is just something that I recommend for you guys. You can do whatever you want, but I essentially put my, and I'll put this on the daily. So essentially what I do is I put a strike on the put, or I put a line here on the put and the call where my strikes are. And then I do a little shaded area where I want to manage the trade. And that's kind of the way that I do it. And then this little brick wall here, that's the expiration date. So I have that on Apple there. And it's real wide. It's real wide. And that's what you want. That's what you want. And then I have one for Amazon as well. So I go click on Amazon. So it's 220 and 250. So you'll see there 220. The 250, this one's not accurate. So I need to put that one on 250. And then I can make this guy bigger. And then I have that shaded area roughly where I want to manage the trade. And again, this is September the 19th. So you can see that this is where the share price is. This is essentially the Bollinger Band. So that one's always like set up on the 20-day moving average. This is the upper end. This is the middle. This is the lower end of the Bollinger Band. And so you can see that the share price is pretty comfortably in the Bollinger Band. And over here in December of 2024, all the way to February, March, it was in my sweet spot, right? The space between the short put and the short call is your sweet spot. So right now the stock is comfortably in my sweet spot. But recently it did spend a lot of time from February to June below my sweet spot. So you can see in a pullback, there's a good chance that I would have to probably lower this thing down to like 200 so that it would continue to be in my sweet spot. And that's why it's important to stay in these trades long enough so you can widen these goalposts so that you can handle any market gyrations, if you will. So let's look at some other ones. Let's look at, I closed out EOSC. You're going to see them, as they say, zero extrinsic value. It means they closed them out. This was a 6 and 8. It's just a low conviction. It was a real small play. That's one that if it dips a little bit more, I may just put it on, but just by leaps. I'll just buy leaps on it and see what happens because I do think that that one's going to go up and to the right. So that is one that I will consider buying a couple hundred leaps on and call it good. Google, we're sitting at 175 and 205, 53 days out, September the 19th. So we go over to the chart, 175, 205. So there we are, 175, 205, September the 19th. And this shaded area is roughly when I want to look to manage the trade. And you can just kind of see it. You know, you just kind of see it. It's pretty comfortable. It's pretty comfortable, but it wasn't that long ago. You know, the Liberation Day or whatever, Google really, really tanked, and it has spent quite a bit of time under my short put. Right now, it's comfortably above my short put, and it's comfortably below my short call. But this is where you have to zoom out a little bit and be like, when's the last time the short call was challenged? And that was over here on February of 2025. So again, I would just be more comfortable when Google is at like 225, and I can maybe lower this short put to like 150. At that point, I could go super, super heavy on Google because it has spent a lot of time in that area. Another position that we can look at real quickly is HIMS. So 40 and 80. So we'll go over the chart, 40 and 80, 53 days out. So that is 40. And then this chart is not accurate, so I need to move the strike price up to 80. Okay, and then I can move this little, there you go, roughly. And this is September the 19th. So you can see that HIMS is very, very comfortably in between my two strikes. And that is just how simple technical analysis can be for me whenever I'm playing these goalpost trades, these sweet spot trades. I mean, you don't have to be a genius to see that HIMS has been hanging out in this area for a while, but it wasn't that long ago that HIMS was way below it, way below it. So you can see that it was pretty recently that HIMS first made the cross above my short put, which was February the 4th, 2025. It went crazy, and then it went back down, and then it went crazy, and it's been kind of hanging out since then. So I'd be a lot more comfortable in that $30 range, because when that $30 range, then I'm capturing a lot of these moves, you know, that where it was trading at previously. But HIMS is also growing. I mean, their CAGR is very, very impressive, the compound annual growth rate. So, you know, the wider the better. The wider the better on HIMS. It's never been at 80, so I feel very, very good about that. Eventually, if it keeps pushing up, you know, maybe this thing looks at like maybe like 30 and 90, something like that, and then I could really, really load the boat on HIMS. So what is another one that we could look at here? Palantir. Let's look at Palantir. So now Palantir is sitting at 140 and 180. So we'll look at Palantir real quickly, 140, 180. So there it is right there, 140 and 180. So you guys can see that Palantir's whole life has been below our short put. But, you know, for whatever reason, this is where the market wants it right now. So we're sitting at 140, 180. The 180 looks pretty damn good right now. I'd feel a hell of a lot more comfortable. We were at like 120, truth be told, at 100 on the short put. So just looking at this chart real quickly, I know that there's a lot of work left to do on Palantir. If it could keep riding the hype train and we can get to our expiration date, which I think is November the 19th or something like that, I feel very fortunate. But if not, I could see me having to move this thing down. You know, I could see me having to move this thing down eventually to like this area here. And then that would feel a lot more comfortable right there. So that's where I ultimately think it's going. But for right now, this is where the market wants it. I'm trying to get it to where it's so that's where we have it, that's where we have it. That's where we have it. And that's really about it, guys. I took PayPal off. I'm going to go ahead and let earnings play out. I already made $75,000 on PayPal. I want to get more answers to the test, and then PayPal is definitely the one that will probably get back on there. Shop was another one that I felt real good about. Made a quick $4,500. That's one that I would like to probably put back on as well eventually. But I got some unfinished business. So this is like whenever I'm done with Soxel, I would transition to something a lot more stable like Shop. And then PayPal would definitely go back on there again. And I got out of NVIDIA. NVIDIA has just never really been a stock for me. I had gotten into this trade because I was down on it. And now we're up positive year to date. Mission accomplished. I am out of there. I am out of there. I got exposure to NVIDIA through SOXL, and I'm perfectly happy over there. So the only move that I can really see me making here, just to be done today, is probably buying some leaps on EOSC, and that's about it. Other than that, guys, the only other thing that I'm waiting for is potentially doubling the position on Apple. So that is pretty much it for the day, guys. So hopefully y'all can appreciate the portfolio update. I try to be pretty thorough today. Because I am going to be tied up the rest of the week. And then next week, we're going to be in Cabo. So it is what it is. I'm 116 days out. Not so with the uncovered calls. The thing can rocket very quickly. Yeah, it can. It's never been to 80, though. So that's kind of my idea with Yankee Doodle on HIMS. Again, when I get to like 90 and 100, then at that point, squeeze, no squeeze, I think we're good. Oh, look, I think we have someone here. What's going on, VR Baller? How are you?
What's going on, TJ? How are you? I'm doing good.
Man, I'm well, dude. Sorry I couldn't get to you the other day. It's just me and Option were in the middle of it, bro. We were in the middle of it.
No, you're good, bro. You have a lot of positions open. That's why. So you're good, bro.
But now I cut it down quite a bit.
Yeah, it's better. I agree. I think it's better like that.
Yeah, I cut it down quite a bit, and then eventually I'd like to get to like 12. Right now I'm looking at it, and I tried. I was like, well, I don't need the leaps on Neo, if you will, right?
Yeah, 100%.
I think Neo's going to be profitable by the end of the year, and I like to make a little money with it. I like to make a little money. I got the 200 leaps. I'm not going to go crazy. I'm not going to get to like 1,000 leaps or anything like that, but. And then end phase, I love the situation I'm in with end phase, just buying the leaps. Eventually, I'll probably put the short strangle back on end phase. I just need to see where the buying power ends up, because I do really want to increase my strangle positions on the higher caliber companies like the Apples and Googles and Amazons of the world.
Yeah, of course.
That way, I'm just sleeping better at night, and I'm still making good money. Not crazy money, but good money, and it's a lot more stable, if that makes sense. And another thing, I know I didn't mention it, but the big account did cross over $15 million today. So
congrats. That's crazy.
Pretty fucking crazy, dude.
That's a lot of money, bro. Congrats.
I'm a dude with an Under Armour shirt still, right? And I wear this shirt like once a week, because that's who I am.
You're like Adam Sandler. You're humble and you're transparent.
Talk to me, my man. What's going on with Lulu? How's that trade going for you?
Oh, horrible, bro. I mean, I'm barely down on it, like almost break even, but it's just like, I don't know what's wrong. It's just not moving. I think it's like, and I know like a lot of people disagree with me when I say this, but I think it's just being manipulated, because Jeffries, like all these banks continuously just downgrade it and lower the price target every like other day. And I think they're just shorting the shares and they're just trying to get it down to cover.
So I did a little homework because I like you. I haven't met you. You don't show your face, but I know what you look like because you do like pull-up videos and shit. Put your shirt on, though. Bro. I don't like looking at that shirt. It makes me uncomfortable.
Yeah, I got you. Let me
you're doing like pull-ups on a subway train or some shit. I don't know. You're a weirdo. But
I got you. 1 second.
No, but John, I don't care, dude. If you got the body, dude, if I had a good body still, I didn't own a shirt for like 10 years. You know what I mean? Back in the day. Um, so I did a little research on Lulu for you.
Uh-huh. You can see
Lulu,
me?
yeah, there you are.
Okay, okay.
Lulu reminds me a lot of Nike.
Uh-huh.
Back in the day, Nike was the thing, right? It
Uh-huh.
was that's what people owned, right? Like, I mean,
Uh-huh.
you had Nikes, you were part of the Swoosh Club, V, Victory, right? The whole symbol, right?
Uh-huh.
But then now there's options. Like you have OnCloud, you have Hookah, you have other things, Under Armour. There's other brands that people are just as proud of to put on their bodies.
Yeah.
So I think that became an issue for my beloved Nike because I'm Team Nike and I have Under Armour right now. But for the most part, any athletic apparel, Nike is the way that I rock.
Same.
The shoes that I wear when I go golfing, they're Nike shoes, right?
Mhm.
And granted, they're not like Nike golf shoes. They're very comfortable shoes that I wear when I go
Uh-huh.
golfing because I don't know Nike. I don't know cleats for golfing.
Yeah.
But there's other options out there. Like there's other companies that have grabbed market share, and now they're just as cool, and in fact, they might be cooler. So I think Lululemon, like some 5, 10 years ago, it was that was the thing, dude. The cool kids were all wearing Lulu, right?
Yeah, for sure.
And now I feel like there's like a company I think of like Viore or however you say it. There's that. There's a lot of companies making nice spandex type leggings, right?
Yeah,
And Lulu's pricey, dude.
it
Like
is.
Lulu's pricey. So whenever people are getting pinched everywhere they turn, and I'll give you an example. My wife and I went to go watch Superman movie.
Mm-hmm.
So we're already out like 30, $40 on the tickets
Yeah.
and $70 on the concession stand. We
Yeah.
did that day. We're like, hey, we're gonna do the hot dog, the little pizza. We're gonna the whole thing, dude. And my wife paid. So I was like, I always look at prices when she pays. Like
Yeah.
paying money, but I'm saying, but when she
Yeah,
uses
of course.
a debit card, I look. When me, I'm like, I don't give a shit, right?
Yeah, of course.
I'm the man. This is what I'm supposed to do in my mind,
Yeah.
right?
Yeah.
Dude, I saw that her concession stand bill was $71, yo, at the movies.
That's
It's
crazy.
just two of us. There was a family. They had like 3 or 4 kids. The little kid was dressed in the Superman cape, and they were going to the same concession stand. And I was thinking, holy shit, how much is this family about to drop on the movies, right?
Probably like 150. That's
Bro,
crazy.
I was like, dude, this is crazy, yo. So I was just thinking, so I had a business idea, first of all. $40 a ticket for the movies. Bring all you can eat. Bring all you can eat and
I agree.
drink. And fuck the concession stand. We got popcorn there. It's like $5 for a tub and fill it up as many times as you want, right?
I 100% agree.
I really think that those movies would crush it, bro, because there's got to be people sneaking shit into the movies. It's ridiculous.
I know.
It is ridiculous. So anyway, what I'm saying is, I think that in this type of environment, it's going to be tough sledding for Lulu. And then I also came across something that was a little disconcerting. Lulu's got to be worried because Costco's got some sort of a knockoff going on.
Yeah, I know.
And Lulu is suing Costco.
Yeah.
And I'm like, bro, why are you wasting energy on Costco? You need to go fix it. So I was like, dude, there's something off at Lulu there, dude. If it's me, you got to bring money in, probably selling calls against those leaps.
The thing is, so what's funny about the Costco thing is, do you remember when I was in Novo?
Yes.
I don't know if it's my luck or something, but when I got into
Wasn't
Novo,
there an issue between them and Hims?
yes, they were but they were suing for the like Walmart versions, like fake versions too. It's the same thing. It's like back-to-back stocks. It's like lawsuits. The second I get in, I swear to God, it's lawsuits after like fake versions. I'm like, oh my God, I can't escape it, bro. I can't. Like, it's just so weird, the timing. But like the reason I don't sell calls against the Leafs is because like I'm just worried. I'm like, because my break even on it is 260, and right now it's at 220. So I don't know like which strike to select. I don't know if it would just be worth it. That's my thing, you know?
Yeah, it's tough, man. I just think that you're in a little bit of a tough spot because I always say again, what's the catalyst, right?
Yeah.
So let's look at the three stocks that I just bought leaps on.
Yeah.
Neo potentially has a catalyst as they go profitable by the end of the year.
Yeah, it's huge.
Huge catalyst because there's one other EV company that I know of, two, and one's debatable, BYD, that's debatable.
Yeah, that's true.
Tesla is for sure profitable, right?
Yeah.
And you can argue, well, if they didn't have Bitcoin on the balance sheet, would they be profitable? No. I don't know the numbers that well. I don't know anymore, right? But because Tesla's gotten its ass kicked here recently, but it still knows how to sell cars and knows how to do other things and knows how to bring a lot of money through the door to the tune of 90 billion plus a year, right?
Of course.
So they can do things to be very profitable if they wanted to cut some shit out.
Mhm.
But Tesla wants to be the most valuable company in the world, so they're not in that mode, right? That's not their mindset. But Neo has a potential catalyst. Enphase has a potential catalyst in my mind if Trump just walks it back a little bit on the whole solar thing and the credits.
Yeah.
So that can be like a huge catalyst that could send his stock to 60, 70, 80 bucks.
Oh, easy. Yeah, for sure.
Riot potentially has a catalyst. Bitcoin going to like 150, 200,000. That's one. Or them announcing an HPC AI deal. So those are three potential catalysts. It can or cannot happen until January 2027.
Yeah, you got time. Exactly like me. Exactly.
You know, so that's the only time. And none of these stocks are at nosebleed levels as far as like where they're trading, with the exception of Riot.
Yeah.
These would have made a lot more sense when Riot was $8 or $9, right?
Yeah.
Truth be told, but I was playing it from a different angle, making money, and I was happy.
Yeah.
But if I want to be in the position right now, and I can't strangle Riot because, dude, the capital requirements on Tasty Trade are like 5 times more than they are on CleanSpark.
Yeah, for sure.
For the same trade, and I'm like, dude, well, Tasty Trade like CleanSpark more, so I got to rock with CleanSpark because I'm on the Tasty Trade platform.
Yeah.
So in case of people don't know why the transition to CleanSpark more than Riot here recently, it's simply because of the capital requirements.
Yeah, that makes sense.
And it's the same premium, same strike price, essentially the same company, with the exception of no HPC AI deal on the horizon because they're strictly 100% Bitcoin miner, right?
Yeah.
So that's, sometimes we're all prisoners to our bankroll.
Yeah, of course.
You can only do what you can do with your bankroll.
Yeah, for sure.
Those are my concerns with Lululemon for you. Is at the end of the day, it's very niche, right?
Yeah, it is.
Whereas when I think of Nike's a lot more than tennis shoes.
Yeah.
Nike is athletic apparel.
Yeah.
Nike has sponsorships with the freaking Olympics, with NBA teams, with the NFL, with MLB, probably even hockey for all I know.
Yeah,
these guys are ubiquitous. They're synonymous with sports.
Yeah.
So, they got deals with universities. You know what I mean? Like,
yeah, I know.
There's people that can't even take a photo if it's not, if the Nike swoosh isn't featured.
Yeah.
Lulu doesn't have any of that stuff to my knowledge.
It doesn't. And I know for sure Nike's going to be here forever. I honestly, with Lulu, I don't even like playing apparel stocks. Like after American Eagle, I got lucky with that. I think it's the worst type. For me, it's just a trade, like not even a long term. I just think it has to bounce. I mean, it's literally trading like it's going bankrupt. And I know for sure now it's not going to go bankrupt. It's like, I saw a rumor that Amazon, Walmart, or Nike might buy out Lulu. I don't know. It's just a rumor I saw on Wall Street Journal or something like that. Because those companies have a lot of cash. I wouldn't be shocked either, though, because Lulu is it's just their own company. It's very singular.
I don't know. Let me ask this. How many backcourts have to be until you would quit on Tesla, or is it less about conviction and more about the premiums? So It's a good question. Let's talk about it.
That's a good question.
Tesla is overvalued, in my opinion, right now today, and overvalued. Being very, very generous when I think that Tesla should be trading at 250. Lie detector test wise, like where do I think I could pass the test? 200. You know what I mean? Like I can make a compelling case to where I could show up with a briefcase to court and defend Tesla at a $200 valuation, right?
Yeah.
I don't need to do any homework to defend it at like 150.
Yeah.
But to defend it at 250, I'm gonna probably have to hire my father-in-law's law firm to come up with something because the valuation is ridiculous.
Yeah.
It's ridiculous. But a year from now, if the robo-taxi legit becomes a vertical, they're able to deliver on a lower price car. Maybe the semi turns into a thing. Maybe the energy thing keeps doing its thing. Like if all of these other things start falling in place, if they've finally been like, hey, this is the Optimus that we landed on, we're going to go to mass production, then at that point, it's going to be real weird because now the base case on Tesla is going to jump to like 400 to 500.
Yeah.
Very, very quickly.
Yeah.
But right now we're in a little bit of no man's land, and it's the company that has the highest execution risk and key man risk of any of the companies out there by far. Like even Palantir, dude, Palantir would be okay without Alex Karp in comparison to Tesla without
100%. 100%.
SoFi would be okay without Anthony Noto in comparison to Tesla with Elon Musk. Elon Musk.
100%. Tesla needs him.
Tesla is going to $100, yo. Without Elon Musk.
I know, easy.
Without Elon Musk, and that's just a freaking reality. And then now it's going to be they all of a sudden the headquarters no longer was in California. It came to Texas. It would go to Missouri. They would be the show me company now, right?
Yeah.
you got to show me the show me state. So Tesla would move to Missouri effectively, and you would have to show Mr. Market that you're worthy of any type of valuation at that point.
Yeah.
Without Elon Musk at the helm. So as much as people claim to dislike him and whatnot, bro, Tesla would go to 100 without Elon Musk there.
He's the brains of it. He's the brains of it all.
And you didn't. I am on record. I was with Carlos and Vitaly on a stream, and I think Tevis was on the stream also. We were talking about Tesla. Kristen had done a lot of research on Tesla for us as a family. And I was like, dude, I'm starting to think that Tesla might be better off without Elon Musk and having a full-time CEO. He could just be like the chairman or whatever. And I don't believe that anymore.
Yeah.
I don't believe that anymore. But Tesla has a lot of execution risk. Dude, it's still my favorite company by far. I'm super excited, but I'm only willing to play it in strangles right now.
Yeah.
These levels, I'm not even comfortable buying leaps.
Yeah, I don't blame you.
Like I'm not comfortable buying leaps, and everybody talks about car sales and stuff like Heinz's chiming in. Dude, when 80-85% of your revenue comes from selling cars, you're a fucking car company still. You're a company that does other things and you do them pretty well.
Yeah.
But at the end of the day, the majority of your revenue comes from selling cars, and that is deteriorating very, very quickly. There's other companies going in there and grabbing market share in other countries as well. You got to sort that up too. Like there's leaks in the roof. You know what I'm saying?
Yeah,
like
100%.
You gotta sort all of that up. But I feel like Tesla needs to push this AI narrative, and they got to push that narrative to justify the valuation.
Yeah,
but
for sure.
Can you look past the fact that they're not selling as many cars? Because what I thought Tesla was doing is they were the iPhone of cars. What do I mean by that? Every 2 to 3 years, you wanted to upgrade to the latest iPhone.
Yeah.
This iPhone was going to have features that the other iPhone, this is the new one, that the other iPhone was never going to have.
Yeah.
So you were forced into these upgrades. So they created this ecosystem of repeat customers.
Yeah.
And then somewhere along the way, it's like, oh, well, these batteries last like 1,000,000 miles and all this other stuff. So
Yeah.
people is upgrading as much. And then now I have a Tesla now. So now I learned about, well, there's hardware 3 versus hardware 4. The hardware 4 has all the pretty cameras and shit, all the good stuff, and it qualifies for more of these upgrades. Where the hardware 3 doesn't qualify for all of these upgrades. So they kind of indirectly force you into upgrading your entire car. So I don't know, man. And then, oh, we're just going to have a bunch of robo taxis, and maybe owning cars is a thing of the past. You don't need to own a car because you essentially have 2 million robo taxis on your app right here. So let somebody else own the car. Oh, but if you do own the car, you can just put it on the app and it could go fetch you money. If you're okay having a bunch of fucking strangers, drink and piss and make out and whatever hell else.
Yeah.
So I'm like, is that? I mean, I could maybe buy a Tesla specifically for that.
Exactly, that would make sense. Yeah.
But no, you're not going to get my Model S Plaid, jerking off for prom date on our backseat. Oh, chill.
I swear, nobody like a lot of that stuff would be happening.
And Optimus is going to be cleaning up.
I swear. The thing with Tesla is and I realize that, and it's similar to Palantir. It's never gonna trade on fundamentals.
Yeah.
And it's not like when I say meme stock, it's not like they're not good companies. They're great companies, but like when I say
but they trade like a meme stock.
Yeah, they're not. So no matter what, they're gonna be strong stocks. And I think Palantir, it's similar. It's just like the growth and people think it'll be $1 trillion. And like you said, I think you said that like nobody wants to sell their shares. And I agree. Like nobody wants to sell them. They don't care how much they're up. And then Tesla, I think, was just with Musk. But like I agree. If I were you, I would just do strangles on Tesla and save the headache. It's not worth it.
The premiums are badass, and it's just way easier than owning the shares. So
100%.
This is an analogy that I came up with Tesla. Just I was probably taking a dump or something. I do my best thinking and tubbing in the shower or in the pooper in the shower. Tesla is this company. We're at the bar. I don't drink. Let's pretend I drink. I don't know.
Yeah. No.
We're at the bar and we come up with this crazy idea.
Yeah.
And then the Samuel Adams are going down, right? When you're Jack and Coke, Crown and Coke, whatever your flavor is. My wife likes some Julio guy with some soda and some red shit around the rim, right? With the wine. So that's her, flavor of choice, if you will. And 2 or 3 or 4 drinks in, one of us has like something else to add to this idea of a business.
Yeah.
And that sounds great. Oh, rounds for everybody. Oh my God, we just took this thing from a $100,000 a year idea to a $250,000 a year idea.
Yeah.
And then we're getting hammered and the drinks are going down. We invite people to go sit with us at the bar, and we're all telling everybody their fucking idea about this amazing company. Excuse me. What's up, baby dog? Yeah, she's getting a hold of the church because it's called the Mysteries. And they're gonna send everything to us that they have, but they got to get it from the church because the priest has it on. Sorry, my wife's asking me about this stuff still, and I'm like, hey, you have my sister-in-law's info, so maybe she can just call her and get that done.
No, you're good, bro.
Anyway, so now 3 or 4 people have joined the conversation.
Yeah.
And they come up with another idea. Oh my God, rounds for everyone, round for everyone, because the deal just keeps getting better and better and better and better.
Yeah.
But it's an idea. And then we all meet when we're sober.
Mm-hmm.
And we're like, okay, we're ready to fund this idea, right? Everybody's going to invest because it's easier to invest with your mouth when you don't actually have to stroke a check yet.
Yeah, of Of course.
Now we all meet, and everybody brought their attorneys, everybody brought their accountant. Now everybody's like legit doing the due diligence, and they're seeing
Yeah.
how good this idea is. And now, as you get sober, you realize how hard it is to bring these ideas to the finish line, to make them come to fruition.
Yeah.
And I think that's what Tesla is in a nutshell. It's the cool ass company that has these amazing fucking ideas. But then when it's actually time to deliver on these ideas, they realize that it takes an extra 3 to 5 years to deliver.
Exactly.
Because the idea was amazing. The idea was amazing. They didn't realize how hard it would be to actually get to the finish line and then talk about scaling the idea and seeing whether or not that idea can be profitable. Like, Cybertruck. It's like, shit, I feel like Tesla's the company that always bites off more than they can chew at the moment.
Yeah, for sure. I agree.
And when they deliver, it's beautiful.
Yeah.
But they're always biting off more than they can chew. And then they get you all fucking amped up about it. And then now it's Elon's timeline. It's worse than CP time, right? Other people time. They're always late. It's just a joke, right? Don't get offended. It's just a joke.
Of course.
But Elon's worse than that.
Yeah.
Elon's way worse than that.
Yeah, he is.
So I'm just like, dude, at some point, how do you value that? Because the ideas are amazing, dude. Who's gonna disagree that having a car that can go fetch you some freaking income isn't kind of a cool thing?
No, it's a good idea.
You're not gonna disagree with that.
Yeah.
But how realistic is it really? How much does it really add to the bottom line? Because if everybody puts their car in the fleet, how much money does Tesla really make? They just become an Uber. They're going to get like 25% of that, 30% of that. So I'm going to go make peanuts on my Tesla, but every 12 to 15,000 miles, I got to go spend $1,000, $1,200 on tires? Nah,
Exactly.
Man.
Exactly.
Maybe the people with the Model 3s and Model Ys, they'll consider it.
Yeah.
So I'm you know what I'm saying? And then it's gonna be a second car. You're really gonna want other people, strangers, driving around in your car.
No.
And then you're gonna take the wife and kids to school in that, or you're just I mean, it's just again, when you start trying to polish up the idea or seeing what you really have, it's just not very feasible.
Yeah.
So it's that idea that sounds real good around the bar while the shots are going down and everybody's feeling real fucking good. Your favorite team's on TV and they're winning, so everybody's in the mood, right?
Yeah, 100%.
Everybody's in the mood. Everybody's watching the Eagles in Philadelphia. Everybody's watching the Cowboys in Dallas, and you're at that sports bar with that energy. You're excited. You're at Yankee Stadium. The Yankees are up 5-4. Mariano Rivera's up to close the fucking game. You're excited.
Yeah.
It's electric.
Yeah.
That's what Tesla is.
It is.
And then they'll be like, oh, here's another one. You're going to get ownership of like XAI or some shit like that. I'm like, we could have gotten that at a valuation like 75% less of what it is today. If that's where you wanted to go, why are you going to get us this shitty valuation?
I swear.
And then he's going to go sell a bunch of his shares and go start all this other shit. Oh, by the way, you don't participate in that. Because what he does with this person with his own business, there's not even a compensation package. I mean, bro, and you started peeling back the onion, and Tesla gets a lot more complicated and less attractive.
It's I think it's the craziest stock of all time, honestly. I think it's going to go down in history. How much commitment is?
So, I don't know. Again, it's my favorite company.
Yeah.
I believe in their mission and what they're trying to do. Tesla epitomizes Peter Thiel's book, 0 to 1. Do the hardest thing first. Well, everything for them is the hardest thing, right?
Yeah.
And they're kind of the first ones to do everything. So there's never been another company like Tesla, in my opinion.
Yeah.
That just constantly takes hard shit and make it even harder and then pump that out and say, hey, I'm going to do it by this timeline. And they're always creating the impossible.
I swear, I know.
I can imagine what stress is involved working at Tesla.
Oh.
These are stats that I'm interested in. What's the divorce rate of employees at Tesla over 5 years?
Yeah, I would love to know that too.
I'm just because this is real life shit. Because I have real life experience.
Yeah, of course.
Y'all all do, but I know how to reflect on it. And I've owned several businesses that I've gotten to this point, and I feel like I'm just here and I'm going to get way up here down the road. But this is the shit that I think of is what kind of pressure are the people that are working at Tesla under? Is it a happy place to work? Or is
Yeah.
it why they're churning out talent? Because here recently, there's a lot of people that have been leaving Tesla. Or do people just use Tesla as like the minor leagues to polish up their drunken idea at the bar, and then they feel like they have enough capital and resources and things, and then they go start their own shit?
Yeah.
Because if you look at the Archers and the Jobies of the world, a lot of those people have ties to Tesla.
Yeah.
So, because they're going out there going after real smart people, now you're taking for granted that you're going to go find smart people without ambition. Very doubtful.
Like,
I'm saying that I'm giving y'all a different glimpse of what I think Tesla is versus just, the fanboy fuckboy Elon when he says goes and I believe everything. I'm just saying that there's a lot that they did. This company's trying to do the hardest shit ever. So it's because it's going to be hard from so many different aspects. Like there's a lot of forces that are pulling against this company. And then now you got a guy picking a fight with arguably the most powerful man in history right now, the president of the United States.
Yeah.
Who's going to win that fight, bro? And I get it. Trump's only here for a short time. Elon theoretically will be here for a longer time. But during this short time, how much damage could be done to this brand?
Exactly. I think the political thing, like, I think that's what really hurt everything with them. Because, like, now you can't win in politics, especially if you're like a CEO of a company. It's just not a good idea to get into that. It's a whole mess.
Yeah. It's tough, man. It's tough. So for all of those reasons, I'm out. No.
Yeah. Like Lori from Shark Tank. I love it so much. For that reason, I'm out.
So for all of those reasons, I short strangle.
Yeah, it's better. You're a genius. I want to do it like you. I don't know if it would work my way.
So what's stopping you from making the easier money?
Because the problem is, I don't know. I would have to have like a stop loss. I feel like, because I can't roll. Because, like, don't you have to have a lot of money to continue just rolling and rolling?
Well, maybe you manage. It depends on your manager bankroll, right? What you're working with, like over 300,
like 320-ish.
Yeah. So
is that enough?
So let's look, right? Because I have accounts in that size, right over here.
But that's like my whole net worth. I can't put more.
No, I get it. Need not say more, right? So let's look at an account that is in your price range. So right here, this one's like 430. So let's look at it.
Yeah.
So 25 short strangles on Enphase, 33 and 50. There's $3,500 of extrinsic value, 18 days out, right?
Yeah.
SoFi, there's 25 short strangles, 53 days out, 17 and 27. There's $2,000 short of money out or extrinsic value. And then the big positions are Hood. There's 50 contracts, $90 on the short put, 135 on the short call, 72,000 out. And look at the cap requirements, 112,000.
Yeah.
17,000 on Enphase, 3,500 on SoFi, and then Palantir's a big one, 140 to 200 down the road, and it's 139,000 in capital requirements. So you could do something similar to this, maybe even have more conservative strike price, but scale back the contracts instead of 50, maybe 25 on Palantir instead of 50 on Hood, maybe 25 on Hood, or the companies of your choice, right?
Yeah.
Like let's look at Lulu, right? Since you like Lulu.
Yeah, the premiums on Lulu are not bad. They do have earnings coming up.
We go 53 days out. I see the copper strip there. That's the implied move. So it's trading in the 150s. So I'm like, well, let's be real conservative at 130. And then let's be real conservative on the short put because that's a 16 delta. So let's match the delta. So we're delta neutral. So we'll go 18 delta on the short call at 200. So now we have a range. As long as Lulu stays between 130 and 200.
Wait, you mean 230, right? I'm sorry. 230 and 300?
130 and 200.
We're talking about Lulu?
Yeah, Lulu. Oh, I'm sorry. This Palantir. Hold on. Lulu. Give me a second. Why didn't it do Lulu? That's weird. Hold on, let me clear this. Let me type Lulu in here. Lulu, right? This guy right here?
Yeah.
Okay, there we go. So trade Lulu. So we're going to go 53 days out. So we have a copper strip that's pretty narrow, actually. It's pretty small. So we got 194 to, we'll cut 191 to like 250, right? Just to round it off. So we go super, super conservative, 16 delta. So we go 185 on the put. And then we go over here on the call, we go 270.
270. Okay.
So now
That's actually good.
What are the chances of Lulu staying in that range, right? Like in your mind, you're the one that follows this company
Yeah.
a lot more, but that's what I do, right? So like let's say I had your bankroll. I was like, well, what does 10 contracts look like? You know, so I look at it and I'm like, I want to get filled right in a little below the middle, just to get it filled.
Yeah.
So now I ask myself, this is crazy, dude. On Tasty Trade, they'll pay me $7,000 and they'll only reduce my capital by 8,800.
No way. Are you serious?
It's retarded, bro. Y'all Robinhood fanboys have no idea what you're missing out. And I get it. This platform is not as pretty to look at. So do you want it to look pretty or do you want to make a shitload of money? You got to answer that question, right? I already did for myself.
Yeah.
So I'm just like, but and why keep it small? Because we got to look at, okay, what are the ramifications of what we're doing, right?
Yeah.
So it's 10 contracts. So it's 18,500.
Yeah.
You got to multiply it times 100.
Yeah.
Times 10 contracts. So that's an obligation to buy $185,000 worth of Lulu at 185. So now the question I have for you is how much do you think you would like Lulu at 185?
I would 100% go all in. That's like free money.
In your mind, right?
Yeah, in my mind, 100%.
Unless maybe let's just say something happens with the Costco lawsuit or I'm just saying there's
a lot of things.
Present day, it makes a lot of sense. But if it goes to 185, there's a reason it's going to 185. Do you see the logic there?
Yeah, 100%. Because we don't know what's going to happen.
Because I used to say that all the time, and it's a flawed idea. The idea is flawed. I used to say, like, oh, if SoFi goes to 6, I'm all in. And it went all in. And it went to 6 several times, and I never went all in. Why? Because when it went to 6, it sucked. Like things were like sucking a little bit more, right?
Yeah,
when it went to 6, 7, and 8, things were sucking because their compounded annual growth rate was like 13 or 17% or something like that.
Yeah.
After fucking Alex Carper said 30%.
Yeah.
So there's a reason the stocks go to these levels sometimes, right?
Yeah, it makes sense.
Not just all manipulation. Sometimes the company's not performing.
Yeah, no, true, 100%.
So you know, you could do strangles on Lulu.
So
bring in, you know, $7,000 every 53 days. If you wanted it, you know, let's just say edit the order, you could probably afford as many as 25 contracts. Like if you wanted, you know, because you could afford it with your bankroll, right?
Yeah.
And then now you're talking about bringing in, you know, $17,000 for that 53-day period. So you do that successfully 6, 7, 8 times a year, you're making some pretty good money. If you just wanted to stick with Lulu, that's one that's high conviction. Now, where's gimme and the gotcha? It could go to 0. Well, that's going to hurt you if you're buying leaps too, right?
Yeah, of course.
You own the shares, that's going to hurt you. So,
yeah.
But is it really going to go to 0? No. I think the floor on something like Lulu is probably like 165. Without knowing the company that much, that's probably the absolute bottom in my mind.
Yeah.
What's the risk to the upside? I don't know. What was Lulu trading at before? This is where you got to go do some research. And what was the market? What kind of multiple was the market giving it? What was the company doing? Did it deserve that multiple? Because we can't say, well, the market was flying high. Well, we're at all-time highs right now. So what does that mean, right?
Yeah.
I mean, so you got to look at all the context, is what I'm saying. So this isn't as quick as connecting the two thoughts, is what I'm saying.
Yeah, for sure.
And that's why I always deal with stocks that I'm familiar with. Very familiar with, because like I know the situation with Hood. Like I feel real good at 90 at 135. but I also know that I could easily have to pivot to like 70 on the put. But then now I'm okay because Robinhood at 70, that's not so bad.
Yeah, it's not. So
Even if it goes to like 50, you can still sell calls at 70 and probably still be okay. 3 or 4 or 5 runs, another bull run, the shit goes back up to 70, you're out of there.
yeah,
But
100%.
again, I don't know Lulu, so I can't help you with that context because I lack familiarity with the stock and the company.
So my question is, when you do the strangles, right? And let's say hood at 90. So if it goes to 90, you have
Right?
to just buy the share. So it's like selling a put, correct?
Yeah,
Like,
yeah, but you don't have to because you're making money on the short call, right? Whenever you're selling a strangle,
yeah.
you're guaranteed to win on one side.
Yeah, correct.
So you're going to use the winnings of the good side to finance the losing
bad side.
side, so you can move the goalpost if you don't ever want to take ownership of the shares.
Yes.
It's against credits and debits, right?
Yeah.
So let's say you sell Robinhood 90 and 130.
Yeah.
And it goes to 90. Well, then the first thing you do is you move the goalpost from 130 to 110 to get more credits.
Yes.
And then you take those credits and then you move the goalpost from like 90 to 85.
Yes.
And you're going to do that for a debit. If you don't want to switch the expiration date, right?
Yes.
But then if you're no longer able to do that because it tanks to like 75, then you need to move the entire goalpost, but you need to move it out more days.
Exactly.
And then I can restructure it to like 80 and 100. So that now you're closer to that strike price that's getting challenged. When that's the best case scenario, you always would rather your short put get challenged than your short call get challenged, because your short put is going to stop getting challenged when it hits the bottom. We don't know what that bottom is, but we know that it's not likely to be zero on hood, right?
Exactly. Yeah.
But if it went crazy, they opened up 5 countries that wasn't on the bingo card. Now all of a sudden this thing's got a $200 price target in the next 90 days. Well, that could get very, very challenging. So the risk is always to the upside. So why am I saying that? The big risk is always to the upside.
Yeah.
Why I like dealing with stocks like Palantir and Hood that have already had those crazy ass runs.
Exactly. Yes. Smart.
Because then the chances of them having another crazy run, like bro, like I know a lot of Palantir fanboys here.
Yeah.
It ain't gonna go to 200 right now. There's nothing in the world that is likely to happen that could send this stock to 200 right now. So you already know that there's a little bit of a cap to the upside there.
Yes.
And in fact, I would argue with you that for the next 24 months, it's going to be very, very difficult for Palantir to get to 200. I think for the next 2 to 3 years, this stock is going to have to consolidate between like 120 and 180.
Yeah.
And let some of these earnings cook before more big ass money goes in there, takes it to another level on the ladder. And again, these are just my opinions, right?
Yeah.
But this is what I love about the strangle. It's a hell of a lot easier for me to pick an accurate range than to pick the bottom and to pick the top.
Yeah.
And then I can just move that range. The wider the range, the less I have to move.
Yeah.
The more narrow the range, the more premiums, but the more you're going to have to keep making adjustments. So if you want to manage less, we'll sell more conservative puts and calls.
Yeah. So the risk to the upside is if it, let's say,
it goes to 300, you have to deliver shares that you don't own yet, right?
So then you would just have to roll the calls?
You roll the entire position.
Okay, yes, because the short puts would be printing.
Big time. Yeah.
Yes.
The beautiful thing is you're not going to be losing on both sides at once. Now,
Yeah.
How do you lose on both sides at once? Because it technically can happen.
Yeah.
The stock's flat, massive spike in implied volatility.
Yeah.
Because,
yes.
Right.
You're shorting the IV.
I understand all the gimmies and the gotchas. That's why you got to be very, very careful with your buying power. So if you can afford 25 contracts, only do 10.
Yeah, exactly. So
and let it play out. And then if you're on the other side of earnings, things have stabilized, then you go a little bit heavier. But like whenever I'm about to deal with earnings, I scale back.
Yeah, no, me too.
Get the answers to the test and then put more contracts back out there.
I never play earnings unless I'm down. Like unless I'm I'm completely red, I'll hold it. But like
let's say, because like if I were to do it on Lulu, I would do the 200 put and the 300 call. So let's say I do 5 contracts, and that would be like 110K, 100 something K to buy. So I would,
So
and it goes.
this
Oh,
is
sorry.
another thing you can consider. This is a real good. Is you can consider buying 500 shares and selling very aggressive cover calls against those, and
Yeah.
then selling 5 short puts, and now you're running the cover strangle. So now you've eliminated the unlimited risk to the upside because you already own the shares.
So I would buy the stock and then sell calls against it.
And so you bring in that premium.
Yeah, and then
You,
buy.
you
Sell more
qualify for the upside up until the point of your strike price, and then you also sell 5 short puts or cash secured puts
with the credit from the calls.
No, with the rest of your capital.
Okay, with the rest of the money. Okay, got it.
Yeah, because 500 shares is going to set you back, whatever that is, 100 grand or so.
Yeah, that makes sense. Wow, this is like.
And then you're going to bring money in from both sides. But if it fucking does a moonshot to 300, well, now you're rolling those calls if you feel like it because you want to go capture more upside.
Yeah,
you're not like, oh shit,
because you have shares.
They're just going to take your shares. You already own them. Who gives a shit?
So like,
and then your puts printed, right?
That makes sense. So if I were to do like 5, and that would be like a third of my account at 200, and then.
But again, this is if you're convinced that Lulu is at a steal of a price right now. I only recommend the buy right strategy when I feel like the stock is at or near the bottom. For instance, for me, if I was going to deploy a buy right strategy right now, because that's what this is, you buy shares, you write a call, right?
Yes.
I would do it on a stock like Enphase.
Yeah,
because it just got a tax kick, it just had earnings. You have answers to the test. You know that you have one more bad quarter at least if you heard the earnings call.
Yeah.
So I'd be buying shares and I'd be selling calls at like 37, 38, massive premiums. And then I would be putting my short put at like 32, 33 bucks. And I'd be making money. Yeah, and that's something that I consider doing, but I'm kind of like opposed to owning shares right now. But I thought about doing it in my son's account.
Yeah.
I literally thought about going all in on my son's account, buying shares of Enphase, getting the crazy premium from the covered calls, but now no risk to the upside, and then some very conservative short puts. And now I'm still bringing in $6,000-$7,000 a month.
Yeah.
But that $2 or $3 I can get in capital appreciation, I can position the account to make $20,000-$25,000 in one calendar month.
That's great. And how much is it worth?
Enphase is trading at like 35.
No, I mean the account. Like you can make
93. Like let's do the exercise. I mean, this is again. I wasn't going to show this to y'all. This was my next live, so y'all are getting a preview. But I thought about doing this with my son's account, like today, right? So this is my son's account. It's only 2 positions. So the first thing was, okay, cool, made another 240 on CleanSpark, be done with it, right?
Yeah.
So I already have it in place. But what I would do, because I have a 33 and a 40, but what I could do is I could cover the position and buy 2,500 shares, because I can't afford 5,000.
Yeah.
But I could buy 2,500 shares, and then now I can lower the strike price from 40 to like 37 to bring in more credits, right? Because if I lower this to 37, and I'd have to reduce the contracts to 25, right?
Yeah.
But I rolled these strikes to 37. Just by doing that alone, you're going to see that there's decent premiums there, right?
Yeah.
But it would be half, right? So I'd be bringing in like $1,800 there. And then I still have my puts there as well. But then now I'm qualified. For $1.75 in capital appreciation.
Yeah.
So $1.75 times 2,500 That's an extra $4,375 of capital appreciation.
Yeah.
But then you see how if I add that up and I'm taking the contracts off, I mean, that's essentially what I'm making over here with the strangle just by playing bigger and white.
Yeah.
So that's why I didn't do it, because I looked at it. Because I'm like, that's the only stock out of everything here that I'm comfortable owning at these prices.
Yeah.
The only other one that I'd be excited to own, but it would have to drop like another dollar, is Neo.
Yeah.
Other than that,
That's
I
fair.
really don't have anything at these prices that I'm like, oh my God, sign me up, right?
Yeah.
There's nothing, dude, because the market's going crazy.
Yeah. We're at all-time highs every single day.
So that's the only freaking stock that if I needed to own shares, that would be the one. But I'm like, dude, if I was going to go all in here, I'd get rid of Clean Spark and I'd add like another maybe 25 contracts if it would let me. But then I lower this 33 to like 30
Yeah.
and put the 40 at like 41 or 42 and call life good, right?
Yeah.
Because there's no catalyst to the upside right now in phase. They're just not. And I'm banking that on the next 18 days, Trump's not going to say something like, hey, we want solar to go to the moon, right?
Yeah, of course. Of course.
That's what I'm banking on. So we'll see.
Have you ever lost doing a strangle?
Yeah, I showed you out here several, not several, but like here on where's the history right here? History year to date. So lost money on Neo. 300 grand. Because I had like 5,000 contracts when Neo was at like $4 or something like that. And I closed those out because we made over $1 million selling our shares of SoFi. So I did that for taxes, and then I waited like 40 days and I got back into Neo. So that loss is still on the books. And then I lost money on SOXL. These are the two angles that I lost real money on. On SOXL, same thing. It was during the SoFi. When I closed out SoFi, I was down on the Soxel, so I closed that out for tax purposes. But it was up over 300,000, and I've recently made like 69,000 back.
Yeah.
And now I'm starting that position all over again. You'll see SOXL. I have it repositioned now, and I'm sitting at 22 on the put, 35 on the call, and I want to get it up to 500 contracts. I'm just waiting until tomorrow to see what happens, because I made some tweaks and I want to really see what my buying power looks like tomorrow. And then I'm going to increase my contracts to 500 on Soxel and start shipping away, right? Because I don't want it on the books. And then on Neo, you'll see that I'm down still 300, but I have the 200 leaps. So obviously I'm not going to make 300,000 on 200 leaps. So I'm kind of hoping for Neo to like go down a little bit more.
Yeah.
And then maybe get to 500 leaps. And if my theory works out, we'll see what happens, right?
You'll make a lot of money. Yeah.
500 leaps is substantial.
That's a lot.
I don't know that it gets me to break even, but if I get 50 or 100 of those 1,000 back, I'll be pretty happy with that too.
Yeah, of course.
So yes, so it can happen. Now, mind you, I didn't have to take those losses. I could have still
managed it.
Still rolled and stuff and manufactured the win.
Yeah.
But I thought it was a good idea because
taxes.
It was a legit thing. We made a lot of money on SoFi, and then I had closed out like 2,000 leaps for over $1 million on Robinhood, and it was crazy.
Oh my God.
So
that's a big tax bill.
Yeah. So I'm like, well, I might as well try to do something, right?
And that's 30%, right, of how much you make if it's over a year, the capital gain?
It varies, dude. It varies because we have what's called a
LLC.
No.
Oh.
We have what's called in this country, I don't know what the actual word is. So let's say you make $1 million for the year, right? You don't get taxed the maximum on your entire million. Like on the first 30,000, you get taxed a certain amount up until like 60,000. These are the tax brackets, right?
Yeah.
So you get taxed a lower amount on the first part of the money, and then you get taxed a bigger amount on the whenever you get over like 250 grand or whatever the bracket is.
Yeah.
Once you get over to that one bracket, then you go like to the max. So it just varies. And then in Texas, it's even a little bit different because of the like some are non-income tax states. Like this is a non-income tax.
Yeah. Same here in Florida.
Yeah, so it just varies. Again, I'm not a tax professional. I don't fully understand it. I still had like 5 wash sales last year, and I was like, "How is this a wash sale?"
Yeah.
And bro, and you can't argue with these brokerages because they put it on what they feel it is, and then you're certainly not going to argue with the IRS about it.
Yeah. We're not.
And I'm like, dude, I thought I did everything fucking perfect.
Yeah.
Still got 5 wash sales that it was like an extra $80,000 to $100,000 in taxes that we wouldn't have.
Oh my god.
I was just like, this is a very complicated game. So I always say, talk to your tax professional. I'm not that guy.
If
I'm still trying to figure out my own shit with that, dude. So I don't know.
Of course. I was gonna ask you, if you were me, like, if you would you switch to Tasty and then just start
Thank you.
doing and then do like strangles and like switch my whole thing up if you were me?
If you got real comfortable with the concept, right? Because people have a real hard time understanding that rolling when you don't have the capital involved in owning the shares is no big fucking deal. Like I just take Hood and Palantir out 116 days. I don't own those fucking shares. I don't care. That's where I wanted the goalpost to feel comfortable right now because I got other shit to do because I'm thinking about going 1,000 contracts on Apple.
Exactly.
So I'm not like, oh my god, you got all this dead money going. Like I don't have any of that shit no more.
Exactly.
I don't have any of that shit no more. So it just freed my mind because guys, I was struggling. With this market. And let me end with this. Let me see if I can pull it back. Let me know if this shows up on there. Let me see. Let me know if that shows up on there. Hopefully it does. Is X on here?
Yeah.
Okay, awesome. So right here, guys, I'm going to end with this because I am pulling an Amit a little bit. Y'all know I love Amit, right? So that is my boy. He knows that he needs anything, he can call Uncle TJ. You know what I mean? So it says, since I went like 95% short strangles, I don't give a shit if a stock is undervalued or overvalued. I only care if I can pick a range that I feel it will trade and I can make requisite adjustments to manufacture the win. It's a much easier path for me mentally. All of these endless fucking hours trying to figure out why a company is valued at X when I feel it should be valued at Y is just time I'll never get back.
Yeah, it's true. Facts.
I couldn't do it anymore. I was done fighting with Mr. Market.
Yeah.
I've never been able to pick a bottom. I certainly can't pick a top.
Yeah. Same.
So I was like, I could pick a range and I could manage that range.
Yeah.
So it was just a game. It just made all the sense for me because I trusted my ability to manage my emotions, to manage my bankroll, and that expiration date doesn't mean shit to me. I could be in this trade for 3 to 5 years because I ain't going nowhere.
Yeah.
But there's some people that once they put the trade on and it goes against them a little bit, they need to get out of that trade because psychologically they just don't like seeing the loser on the books.
Yeah.
And I'm just like, dude, I'm just making adjustments, and one day I'm going to coast to the finish line.
Yeah.
So that's all I'm doing is I'm just making adjustments, and then I go heavier on the ones where I'm already adjusted, right?
Yeah.
Once I'm adjusted and comfortable, I go heavier.
Makes sense.
But while I'm still adjusting, I try to keep it a little bit lighter. That's why I like and that's why I'm 200 contracts on Tesla because I'm comfortable.
Yeah.
250, 500. I don't care what y'all talk about. Tesla can go in circles for all I care.
That's like the best trade. 250 and 500. That's like free money.
I'm
And
like
when does it expire?
June, 11 months from now.
Okay. That's a good trade. That's a good trade.
But I'm collecting data every day.
Exactly.
Every day, FinTwit argues about Tesla, and I'm collecting $3,000-4,000.
You're still getting paid no matter what they're saying. It's better.
I don't give a flying shit. If
You're the
they want to flying saucer business for all I care.
Yeah.
Like I don't care.
You're the casino. We're the gamblers. I swear. That's how it is.
I don't care. I hope the 250s get challenged.
Yeah.
And I'll lower my 500 to 400.
Yeah.
And I'll lower that 250 to like 225. And then I can lower to 200. And now we're talking about, hey, I maybe want to own these shares.
Yeah, exactly. It's better.
So I'm always hoping that the put gets challenged so I can put myself in a position to potentially take ownership of some shares and then ride them back up as a swing.
That makes sense. So what I learned is like the biggest risk is to the upside if you're short the calls and then you don't have shares, because then they would force you to just like if your short calls at 70 and then it goes to 75, they would force you to buy shares at 75 and sell it at 70.
Facts.
And what happens if you don't have enough money? They'll get you in margin.
Margin call. They'll liquidate your ass. You can't really put yourself too much in that position because they're managing your risk.
Oh, okay. They'll take care of that. Yeah.
And but yeah, dude, that's the issue.
Yeah.
Those are the issues, right? So don't over leverage. Don't sell too many contracts. And I learned that with Tesla.
Yeah.
Tesla was my experimental child, dude. I did it right in front of y'all. I had like 500 contracts at once.
Yes.
The buying power didn't like that, dude. My buying power was fluctuating like 2 million a day, dude.
Bro.
And I was like, okay, well, this is crazy. But I started scaling back and trying to figure it out. And then boom. So I was like, I'm gonna do it again. I went 0 to 1. Hardest thing first, Tesla.
Yeah.
So I started with Tesla. Dude, I need to roll the table. I gave it all to you guys. I gave you all the information for another short stranger book now.
Yeah, for sure.
I'm finishing up the Wheel Deal book. Fuck that book. I'm giving you all the short stranger book now.
Yeah, exactly.
And it's all since March.
Yeah, exactly. Yes, I remember. I remember
it. Started with Tesla, the hardest thing first.
Yes.
And I figured it out so I can understand the buying power, figure out the dynamics and how it all works. The extrinsic value in the data, like everything. Everything. Yeah. And then I was like, okay, now let me scale it down. Let me kick the shit down the road because Tesla's crazy.
Yeah, it is.
And let me go play. And then if they get crazy, I'll kick it way down the road and I'm only managing them 4 times a year. Because eventually I want my life to be backstop short strings. Everything's a year out, super fucking wide. And it's almost like we're all surprised when I have to go live because I got to go manage the strangle. Right? So because people are going to be kind of surprised if I have to go manage that Tesla string. Me too.
Yeah. Well, I wouldn't believe it. I mean, 250 and 500 is like.
Yeah.
So now I get why you do, because the one thing I never understood is why are you doing further expiration if you're selling them? But now I know you're getting more theta, and then if it goes up,
it's easier. It's easier theta and it's easier to manage because the moves aren't going to be so violent, right? Because I don't have any gamma. Gamma's not in the equation for me. Volatility still hurts, but it also, like, the further out that you are, the less gyrations to your buying power.
Yeah, it's true.
Tasty trade does not like having a bunch of expiration dates under like 30 days, bro. Like I can already see it, how the buying power, the cap requirements on those stocks, they progressively go up.
Oh my God.
The Tasty trade wants you to just collect that easy money. Don't go after that hard money. Go get that easy money.
Yeah.
And then if you're going to get that hard money, that last 21 days, that's the hard money.
Yeah.
Make sure you're nice and wide because we're going to be monitoring this shit. And if we don't like it, you're not going to like what you see when your buying power goes away. Right?
Exactly.
Like this is me talking to the Tasty Trade algorithm because I feel like that's how it thinks.
Yeah.
So like you better be nice and wide and have plenty of money to take ownership of these shares, or we're going to jack you up on the cap requirements for this trade.
Yeah, no, it makes sense. Like that's why I'm not really selling calls against my leaps because it's risky. I don't have the shares.
I'll end with this, man. I gotta go. Hello, TJ. I think the biggest gem on this triangle is ensuring you have the cash to cover either leg should things go sideways. April is still fresh on my mind. Yeah. Bankroll management, dude, is key. Emotional management is key. And I think it comes down to like your positioning, and also, can you stay in this trade long enough? Are you willing to stay in this trade long enough? So a lot of the same rules, if you will, apply. Pick stocks that you don't mind owning, that you don't mind being, because you're going to be monitoring this shit. Even though you don't own shares, you're still going to monitor it.
Yeah.
And so you gotta pick stuff that you're very interested in.
No, makes sense.
And then get familiar with it, right? Get very familiar with it. And then you're gonna have to start studying price ranges, right? And looking at like supply and demand levels on the charts. So this is a lot more technicals involved than just selling your short puts at 30 delta and your short calls at 30 delta.
Yeah, exactly.
There's a lot more that goes into it in that, because picking the wrong levels on like when to strangle a stock, it could probably really
hurt. It's a nightmare.
It could hurt you, dude. It could hurt you. So if you're gonna dance with something like HIMS, I'm fully aware though of the short squeeze potential on HIMS.
Yeah.
So I'm also like, I could just buy those damn shares and get very, very aggressive with the covered call and take all that pressure, and I'm essentially just playing it as a short put, cash covered. Yeah. So you can't really play every stock the same way.
Yeah, of course. It has to be a good quality stock, because
But they have personalities, dude. Like these stocks have personality. Everybody knows that HIMS is volatile. Everybody knows what Palantir's been, right? Everybody's seen. And Hood, I know that Hood, like there's like euphoria and all that stuff right now, but dude, we also gotta recognize that Hood's been growing a mile a minute, and they've just been pumping out products.
Yeah.
And they go and they talk about it and they pump it out. They talk about it, they pump it out. They're delivering, dude. I mean, I'm not on the Robinhood platform anymore. We're talking about the company. We're talking about the stock.
Yeah, of course.
I mean, dude, all they're doing is winning.
That's I swear.
They ain't getting bogged down by fucking bank charter. They ain't doing any of that shit. They're like, no, we don't want that. We thought we wanted it. Hell no. This will slow us down. And so now they're doing creative financing shit with the gambling and then
the mortgages, the bank,
emerging markets and tokens and all this other crazy shit I don't even halfway understand. I mean,
the staking is big too. When you stake the cryptos, that's like,
dude, they're legit, bro. They're legit. So
Coinbase is in trouble.
A lot of these fuckers are.
Yeah.
I know, because I'll argue like even just like regular banks, dude. Because I think Amid and Crossroads made very, very cogent points a couple of years past. They might not even remember. A lot of people are going to start treating their brokerage like a checking account.
Yes.
You're like, dude, I'll just have all my money there. Dude, Robinhood gives you a debit card.
Exactly.
I used Robinhood as my checking account for a year before.
Yeah.
I was like, I just swipe my debit card. I mean, I was good. I knew how much money I had in the brokerage. Like, what I need to keep tab of anything else.
Exactly.
And I was like, I can see a lot of people doing that. So they're not going to need a traditional bank. I'll just use my brokerage. I'm good.
I agree. I think the banks are going to be, it's a big problem.
Yeah. Dude, it's interesting. It's interesting. And then now people are starting to get excited about SoFi right now because it's going up. But I just wonder what that excitement is going to be if SoFi doesn't deliver anything on the tech side of things.
Yeah.
Exactly.
Oh, yeah. Tomorrow's their earnings.
Yeah.
Wow.
So we'll see. Anyway, I got to run, man. Appreciate you guys. TJ, the Will Deal signing off as always. Mark Sky, stay blue stock screen. Peace out.
I appreciate you, TJ. Thank you for having me.
Take care, bud. Bye-bye.
Thank you.